The euro weakened about 1% yesterday, currently at $1.3261 as the Greek sovereign debt issues resurfaced. Does Greece really need that 40 billion euro, or should they be getting more?
What they are looking at right at this moment is two different things. The one is we've had bad news about what the deficit was last year. The second is that their projected deficits are going up because the interest at which they are refinancing their debt is going up. So they're in a kind of negative circle, if you like, in terms of that. Plus, there's a big repayment of debt coming up in May, around about middle May. So it's a very relevant issue right now. At the same time, if you listen to the IMF, they're saying, you know what, Greece makes up 2% of EU GDP. So, this huge fuss about Greece is actually out of line. Really, the euro shouldn't be that much affected, but I think that the markets are seeing Greece as a harbinger of more problems. So will the Eurozone be unbundled? Those kind of concerns come up all the time, and that's why the euro has been fairly weak.
But a budget deficit of about 13.6% is quite high, so Greece is a problem.
Greece is definitely a problem, but it is a problem that can easily be solved by the large countries if they wish to. So what is more of a worry to the market than the actual size of the Greek problem is the fact that the Germanys and the Frances of the world doesn't step in and just sort it out, because it's very easy for them to do so. It's small fry in terms of the overall picture.
Okay. When the euro weakens, we see a bit of weakness in the local currency. Are we still seeing that correlation between the two? We know that Europe is one of our biggest trading partners.
What we used to see is that the rand would be weak when the dollar is strong, and the other way around. So they're effectively moving a little bit more with the euro than the other way around. In this whole euro crisis, if you like, the rand hasn't weakened, so you will see that the rand is actually much stronger against the euro, which is one of the reasons that there was speculation that we might see a rate cut. But in the last couple of days, we've actually seen the rand a little bit weaker, more on concerns about commodities, and the commodity concerns actually goes with the oil price because the non-use of aircraft fuel because of the European crisis in terms of flights.
So what's been driving this rand strength?
Rand strength is twofold. The one is the relatively high interest rates that we got that still fuels the carry trade, and the other thing is that our exports has been quite strong because the commodity prices have recovered, but our local demand has still been very weak. So we haven't really seen local demand picking up strongly in South Africa.
Sticking with the rand, the SARB decreased rates last month given the strong rand. Are you seeing them decreasing? We heard Jill Marcus saying that they may not be another rate cut.
Well, I think that the person who really makes the decision about this is Jill Marcus, so we should probably listen carefully when she speaks. So there was a lot of speculation that there would be another rate cut just because the figures coming out for domestic demand in South Africa is still weak. But I think that given the fairly strong prospects for the South African economy, we'll see rates roughly where they are now for a while yet.
Talking about strong prospects for the South African economy, the IMF revised South Africa's GDP upwards by 2.6%, but it did say that the strong rand, the unemployment as well as tight credit could prevent us reaching this. We've got private sector credit extension numbers coming out next week. What is your view there? Are you seeing a downward trajectory from here on?
We've seen the private sector credit extension actually contracting over the last couple of months, but that's got to stop at some point because we are seeing sales of houses picking up, so there should be some bond credit out, and we're also seeing car sales going up. So at some point in the next couple of months, we actually should see that turn positive, and it might be this month.
A world economy at IMF as well, world economy at 4.1%. That is quite strong as well.
Very strong. I mean, if you're looking at the global economy, all the prophets of doom that said that we can't really grow, that we're going to have a double depreciation, all of those things, all of those seem to have been proven wrong now. 4.1% is actually very strong growth. And that's why our exports also are still doing well, because commodity prices are strong on strong world growth.
All right. And then we've got CPI, PPI coming out next week as well. What are your expectations on that front?
We expect positive surprises for a couple of months yet because the very strong currency drives it, and also weak demand. Those are the two factors that should drive down inflation. So we believe that on many of the instances we'll actually be surprised at how low inflation comes in.
Okay. And the G20 is due to meet this weekend. What do you think they'll be focusing on? I know bank reform should be on that list.
Bank reform, definitely, and there's now the proposal of a uniform tax, global tax on banks, so that would definitely be on the agenda. But I think it will be a more relaxed meeting than it's been for a while, because world growth is going well. A lot of the problems are being sorted out, so better than they've been for a while.